The market bounces off our support zone and races to new highs. Is there any gas left in the tank? Find out next on Invest with Jacob. Alright guys, so in yesterday's video, I gave you our first support zone as well as our main resistance zone on the chart, and they both played a huge role in today's action. The market pulled back right to support, then bounced strongly, racing through the main resistance zone to new all-time highs, which opens the door to our 45.50 target. Now we'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay guys, so after a few days of choppy trading, we finally got a pretty straightforward trading day where the market pulled back to support and bounced and then raced up through our main resistance to new all-time highs. This opens the door to 45.50 if the market wants to take it. Now it isn't the most reliable path as it is an ending diagonal, and that's usually what you get with these choppy trading environments, but we can see that best on the charts, so let's jump in and take a look. Okay guys, so here we are on the 5-minute SPX chart, and it's a little bit complex as it's an ending diagonal structure that we have, and those aren't the most reliable structures, but when we're presented with them, we have to take what we're given. So this pullback finally gave us some clarity on this move up because there was no real setback for a B wave to start some kind of ending diagonal, and there was no 5-wave structure up. So this pullback to support was good because it gave us a clear B wave pullback so that we can finally get some kind of structure in this market. So remember, we made this move up and many people wondered if this was a 5-wave move up, and I said it was 3. And then we had this long drawn out 4 and then a high up here. It was kind of an odd structure, and that should have clued me in that we weren't getting a very impulsive move up. And then we got all this muddled mess across here. So in going back and counting this in 3s, it counts much better and much cleaner, and it looks a lot like an ending diagonal pattern. So we have our first wave up in A, B, C is 1. Remember, ending diagonals are 3 waves. And then we get our wave, A, B, C down in 2. And then we got our A up, okay, our B wave down. And then remember, all C waves in ending diagonals are 5-wave movements. So it's a little bit confusing because the overall structure is a 3-wave movement, but the C wave is a 5-wave movement inside of that 3-wave movement, if that makes sense. And looking at it on the chart is really the best way to make it make sense. So I have the 5 waves on here so you can kind of understand what I mean. You get A up, B down, and then you got 1, 2, 3, 4, C. So it's still a 3-wave structure, A, B, C. The C wave is composed of 5 waves. So with this move down in support, we got our B wave down, okay? And then we start C up with wave 1 because it's going to be a 5-wave structure. Now we're looking for a pullback in wave 2 down to around 44.60 in that zone somewhere because that's about 50% retracement of this wave. Okay, and then we're looking at wave 3 up, wave 4, and then wave 5, which gives us our 3rd wave overall. Remember, we had 1 here, 2 down, then we get our 3rd wave up. We're looking at our 4th wave down here, and our 5th wave up toward our 45.50 target. Now, you may wonder how I put these levels in here, and again, it all comes down to our fib-based extension tool. So if we've got wave 1 up here, we assume that this is complete, and we're going to get a pullback tomorrow or over the next day or two. So we get our trend-based fib extension tool here. We go to the bottom of wave 1, measure to the top, and then we pull back in wave 2. Okay, so we have about 44.60 for our wave 2 pullback. Wave 3 targets the 1, 2, 3, 6 area, which is about 45.10. Okay, wave 4 generally hits the 764 extension or the 618. I have it at the 764 here. If I hover over it, you can see my dot on the 764, which is about 44.90 for that pullback. And then wave 5 targets about the 1618 or 1382, somewhere in that zone, which is going to be around 45.20. And then we get the wave 4 pullback here, which will be an ABC down, by the way. And then wave 5 up towards 45.50. Now again, ending diagonals are not the most reliable structures, but it's the only way to count this right now. You have to count it in 3s, and given the structure that we have now, it does fit the pattern to get us to 45.50, which was our main target. So if the market wants to take this path, it certainly can. So what are the red flags here? Well, if this comes down towards wave 2 and just keeps coming down through support, when we break this support zone, that is a red flag. Okay, that's why I have the warning in here. That is a red flag that we have started larger wave 4 down toward that 4165 to 4250 range, depending on where we top. So this support zone becomes of the utmost importance. If we break the bottom side of this support zone, it is a red flag that we are probably heading down sooner than later. As long as we maintain above this support, this can rally up to our 45.50 target. But as I've mentioned in the prior videos, there are a lot of reasons that this market looks to be running out of gas in this particular rally, and so we have to be very cautious. This is not a super strong trading environment. Now we'll get into where the best trade setup is in this structure, but first guys, I get asked a lot about individual stocks and breaking them down, and because Elliott Wave Theory is so in depth, it takes me a while to break down the SP 500, so I just don't have time to do individual stocks. So I highly recommend using the Motley Fool Stock Advisor for that. I use it myself. It's an excellent program. We'll go over here and take a look. They like to tout, okay, their older stuff, their Amazon, which is an amazing play if you got it in 2001, or 20 years later, Walt Disney, Netflix. Those are good ones, but those are pretty old and people aren't really up to date on what they're doing now. So I'm going to give you a little sneak peek on 2 stocks that they gave me in 2016 and 17 so that you get an idea of what kind of stocks that they recommend and what kind of returns they're getting. So the first one is Twilio. They gave it to us in 2017 at about $30 a share back here, and it is now trading at $346 a share, or 11 times, 12 times more in just 4 years. And the other one, the other big one that I want to talk to you about is Shopify. They gave me that in 2016 at around $28 a share. It is now trading at $1,400, almost $1,500 a share. It's at $1,489 right now. These are just 2 of the many they have given, but I wanted to give you some of their newer stuff because they like to tout their older stuff, and everybody's like, yeah, of course you got Netflix. Yeah, but you probably didn't know about Shopify and Twilio. So those are 2 of them. Highly recommend this service. I'll leave a link in the description down below. You can get it for $99 for the whole year. They give you 2 stocks a month. It's a really great service. Full disclosure, I do get a commission if you buy through my link. Okay guys, so let's get back into the market. The best trading setup we have here is if we get a bottom in this wave 2 area around 44.60. We can enter a trade there and look to capture 40 to 50 points up here. That's a pretty good risk reward. You got support right under you here and about 50 points of movement up. So should we get a pullback in wave 2 and a good bottoming area here, we will look to go long on a pretty decent risk reward kind of short-term trade. Okay guys, so if you want to know when we enter this trade and what level we're using and what expiration we're using, everything that we do, and you want real-time market alerts from me, you need to get in my Facebook group. There'll be a link down in the description. Go ahead and click that link. You click that link, you go over to my Facebook group here, you get accepted, and you go to our announcements page. When you scroll down on announcements, I have all my trades documented in here so you can see how we're doing on trading, as well as a link to my Slack channel. It's a real-time chat channel. It's free. I don't ask you anything to get in there. The only thing you have to do to qualify is you have to subscribe to my YouTube channel. So go ahead, hit that subscribe button. Okay, come on over here to Facebook, get my Slack channel so that you can get our real-time market updates. You can get our buy and sell alerts. You know when we enter a trade, when we exit a trade, all of those great things. It's a talented community of traders. So go ahead and subscribe to this channel and get in that group. We'd love to make some money together. All right, guys, so key takeaways for today are really simple. We're following this path down in wave 2. We're looking for a bottom so we can enter a trade. If it blows through 2 and keeps moving down, then this support zone becomes of the utmost importance. We really shouldn't come below this B wave. And if it blows through the bottom of the support, that is a red flag that we are heading much lower in a larger wave 4. So we have our parameters, guys. We're watching to possibly enter a wave 2 trade here if we can get a bottom and a push up. And we're also making sure that we hold support because anything below that becomes a red flag. That is the market update for today. I will talk to you tomorrow.